Welcome to Markets Now. I'm Michelle Rook along with Darren Frye with Water Street Solutions. As we move through the mid-session, we're seeing mostly higher prices except for parts of the cattle complex. And Darren, like I said, we're coming back here. It's been an ugly week, but what do you think? Is this just a dead cat bounce because it's end of the month and we're so oversold, or what?
Yeah, I do. I think we're oversold. We need to have a bounce. It is in the month, into the week, like you said. And I'd be looking for a rally into early next week, mid next week. And, I'm looking for anywhere from a dime to 15 cents off the lows in corn, maybe 25, 30 in beans. And then I think that's an opportunity to sell again. That's my opinion today on Friday.
Yeah. So it's been an ugly week. We're going to have lower weekly closes and everything, and funds really have sold massively. So, was there one particular catalyst for this, or was it just a combination of a lot of bearish factors?
I think it's just a combination of a lot of things. We've been talking about the weather and the slowdown in planting and the tightness in old crop and the fact that the basis is on fire out west and the spreads are gaining, whether it's an up market or a down market. The spreads have been relentless May over July, both beans and corn. And even though we've been breaking hard, we've seen the spreads gain in that environment. So it really is puzzling to look at what the spreads are doing and what the overall market direction is. So I think a lot of people are mystified by the last 4 or 5 days of price action. So we're probably due for a bounce, but I think more than anything, it's going to be about the weather and the window of opportunity to get stuff planted as we roll into this first half of May.
Yeah, the market really is not terribly concerned right now that we're not going to get a crop planted or that we're not going to have a good crop, right?
Well, at this point, it's not. And I think also to add to the bearishness, not that the rain's going to help a wheat crop that probably has been abandoned in a lot of places or dead or froze out or blown out with all the winds out west, but the rains in the plains certainly had an impact psychologically on the longs in Kansas City. And so obviously we saw some pressure there too. But I don't think you can look at anything other than trendline yields right now, given when we're planning and given how strong this El Nino is getting. I do think that we're going to see a more active jet stream, and that could lead to a pretty good summer here for row crops.
Absolutely. So that's some of the catalysts for the sell-off in new crop. Old crop's a different story. Really, it's been a demand story there, and the China cancellations this week and Brazil's competition and lower prices have not helped, have they?
No, they haven't. Brazil's going to end up probably a pretty big crop here. Some people have pushed the yield expectation for their total corn crop to be over 130 million metric tons, and StoneX being one of those. But in addition to that, we did see cancellations. China probably bought 4 million metric tons of corn over a period of time, and now they've canceled about 24 million bushels, which is, let's say 2/3 of a metric ton. And so some of that is what is concerned the old crop market and some of the weakness that we've seen in both May and July. The real question, and nobody knows, will we see more of those? And I think it's very possible if we see an open planting window. If we see pressure to the downside, I think China will cancel more of that corn and switch it over to South America.
Yeah, because did they strike a deal here when Lulu met with President Xi, and did they kind of say, hey, we're going to get you to July and then we're going to have all this corn and we're going to offer it to you at a much lower price than where the U.S. is?
I don't know what type of arrangements have been made, but I'm certain that, China, the way our political relationship is with them, I mean, they'll do everything they can to take from Brazil before they take from us. So I think they are just trying to get by. I think some of those purchases also were just insurance on the corridor, but I think they have a lot of leverage over Russia. Nobody's talking about the May 18th date coming up today like they were a week ago or 2 weeks ago. But I think China did some purchasing just for some insurance on that as well.
Yeah, you're probably right about that. Okay, let's talk technically. Corn market did take out some key supports, old crop and new crop yesterday. What are you watching there? How much farther do you think will go down if today is just a dead cat bounce?
Well, I think we have a few days of up, probably some type of a three-wave pattern up that will end up being a selling opportunity. But again, 10, 15, 20 cents on corn, probably nothing more than that from the lows. And then soybeans at 25, 30 cent area. And I think the exuberance that we've seen to the downside here just says that we're in a wave 3 of an Elliott wave pattern. And that just means that we have more downside. And if anything, and I might be wrong about this, but if anything, after this rally that I think we're going to have, I would expect not only the market to return to the lows, but maybe accelerate to new lows here on this next move. And I think that'll be largely hinged to what type of planting weather we have. But I think we could see things get pretty exuberant and accelerate to the downside next week and beyond through May.
So you don't think the low is in corn? What about beans? Because we've held good support. July's held 14, November's held the 1250 mark, and soybean meal's back higher here today and has at least held where it needs to.
Yeah, those are also bounces I'm willing to sell. I think meal is done going higher, no new highs for old crop beans or meal, in my opinion. And I think once we get the May through the delivery process, again, if weather's going good, I think it's going to really put a lot of pressure on even the July contracts. But soybeans, I'm more concerned about new crop acreage. I think the planting window is good. We're going to plant 91.5, 92 million acres. We might even have some PP up north. And then that maybe is reduced off the bean balance sheet as far as acres planted. So I'd like to see us get 500,000 more acres, because I think the bean balance sheet is going to be pretty tight as we get into that August, September timeframe.
No, I think you're right about that. And you kind of mentioned your thoughts about wheat, but just a follow-up to that. Contract lows yesterday. Do the contract lows hold here? Do you think that is a low in the market?
No, I do not.
Okay.
I don't think we mark lows in wheat until we get through the middle of June to the end of June. Seasonals turn up there in July for wheat, and I think we got more downside to go. So those are opportunities to sell rallies too. That's been a confusing market because soft red, we got a good crop coming. Kansas City, we have a terrible crop. And obviously, that's the confusing part. Even Kansas City has participated on the downside, which a lot of people didn't expect, especially after the freeze this week. So,
yeah. And you get a 50-year low in spring wheat acreage projected, and you can't get in the field up there. So that's also perplexing. I know Canada's crop is supposed to be bigger, but, they got to get it planted too. All right, livestock, cattle market, we've kind of consolidated under the highs, but that market has been kind of cash led. We have a little 173 cash trade here in the South today, but certainly this has not been necessarily a higher week for cash. Where do you think this market is going?
Well, I think the market is just, running out of time here to push higher. I know numbers are tighter. I know there's a lot of fundamentals that are strong, but I don't expect that we'll take June above that 170 level. It's hanging out around 165. And yes, we could push up to $4 or $5 more. But I think here as we enter May, the middle of May, I think time-wise and price-wise, we're going to see a correction at some point. It's going to have to be the cash market that starts to crumble. Right now, packers have margins, and the choice select is out to $20 or plus that, I should say. Choice is like $3.11, so the product is still good. They got margins. I think if the product starts to falter, the packers will start to slow down the chain speed and maybe even kill less on Saturday. And obviously, that's how you start backing them up, and that's how you get weights a little heavier. That's how you break the cash. And they're good at that. And so they haven't done that yet. And as long as the cash market is strong, especially in the north, we're going to see this market stay firm. But the futures are just sitting and trading sideways here right under the high, like you said. And that would concern me if I was long.
Gotcha. And let's wrap up here with hogs. A little short covering bounce here today as it just ended the month, or can we build on this? Because it looks like technically we're above some objectives that maybe we can start getting the funds to get out of some of these shorts.
I'm not looking for a huge up move, but I am looking for more than what we've gotten, maybe another couple bucks or so, more in duration of time. So I don't think we top the market out for another 5 to 8 trading days, and probably $1 or $2 higher than where we are now. And then I'm looking for new lows in hogs again. I know some of the fundamentals are improving, but I'm just not bullish wave counts out into fall, into that fourth quarter. So we'll see what happens, but I think a little higher and then one more leg down here before we have a more meaningful rally.
All right. Thanks so much for joining us, Darren, Frye, Water Street Solutions. That's Markets Now.